How are we all doing this afternoon? It's been Digital Nigeria International Conference, and I have to say that I am very privileged to be here to moderate this fantastic session. I imagine it would be. We are looking at prioritizing blockchain technology and what are the implications for digital assets innovation, I imagine in Africa or Nigeria generally. And why is this? Over time, we have seen how blockchain has developed over the years, especially since Satoshi Nakamoto invented the Bitcoin. It's been over 10 years, and what we have seen is a gradual evolution of the technology itself, whether you look at the application of the technology within the financial sector or other sectors as well. We have seen how digital assets have become one of the biggest creations of the blockchain. And depending on who you have a conversation with, people tend to confuse what digital assets really are. Sometimes it's called virtual assets. Sometimes people even call them decentralized currencies and all of that. So, in prioritizing blockchain technology, I would like to ask, I think I will start with Saminu. How would you say Nigeria has been prioritizing blockchain technology over the years? And what are the implications for digital assets innovation in this space?
Thank you very much. That's an excellent question. Yeah, thank you very much for the excellent question. With regards to prioritizing digital innovation in the blockchain space, I would say Nigeria has made a massive impact with regards to identity. I come from a background of security, so identity is something that I've looked into, and yeah, identity is something that I've looked into, I've researched in detail. With the recent Ihenyen wallet that have been built, what we are going towards, or what the future is actually building towards, a decentralized future where every single thing you do is reflected on your identity, your on-chain identity. And this is why I think most of the progress has been made. In the future, we would have a future whereby whatever you do, your actions on-chain, what you buy, who you interact with, what you actually get into your wallet will determine your credibility, your trust, and what financial tools you can actually gain access to. Now, this is an innovative use case, especially going going towards what has actually been built with regards to Ihenyen. The Ihenyen today is attached to a memory name, but the underlying technology, you have a wallet in there. That wallet is actually your on-chain identity. Now that's one impact. That's where the future of innovation is going. The second one that I want to address as well is real-life asset tokenization. There has been some really, really interesting projects that have been coming out with regards to blockchain, like fractionalized real estate, where it opens up the opportunity for 10,000 people to be able to afford one, or this international conference center actually. Imagine if you're trying to privatize a large asset with such a large value. Selling it to one person can be quite difficult. What the traditional finance does is they get loans, they get financial backing from multiple sources. It requires so much contracts and documentation. But imagine fractionalized assets. The government in the future can raise funds from the public, just as they're doing through taxation. But imagine tokenizing this. You have an asset that you want to fractionalize, you give it to the public, instead of paying taxes, they can all invest in that asset. And in the same way, through their digital identity, they can actually get remitted dividends. So the future is building towards a decentralized identity, on-chain identity, and also a real-life asset being tokenized on a blockchain.
Awesome, that's fantastic. So looking at blockchain applications, you talk about digital identity and real estate tokenization. I must say that's a very massive adoption of that technology. And this all brings us back to the issues around transparency, security, decentralization, the basic characteristics that blockchain technology has. I would like to take the question now to Salisu Uba. I've been in touch with Salisu Uba for some time now over LinkedIn, and I recall the first time we had a chat or thereabout was when Salisu was conducting research on blockchain and supply chain. And I happened to be one of those, he reached out to make some contributions. And Salisu, Saminu has just told us how digital assets application in digital identities and real estate, industry could be very disruptive and add value. As one, I know you to be an expert in supply chain, in procurement as well. You're also a blockchain expert. Where do you think that we're going from here? Looking at the adoption of blockchain in helping to bring transparency, perhaps to procurement, to supply chains. Where do you think we are going from here? And how should we be going if we're not going the right way?
Thank you very much, Senator. It's a pleasure to have you. I think this is interesting. From the perspective of Africa and in specific Nigeria, I would say the future is bright. And there is absolutely no doubt that the future of supply chains is digital. And driving digitization of supply chain, we've seen increasingly how blockchain technology can enable value addition, because that's obviously important. There is a lot of misconception around the adoption of blockchain within supply chains. So think about today in Africa, we have the ACFTA, which is a very great initiative that is going to unlock different opportunities for Africa in terms of trade. And fundamentally, one key aspect that is essential in driving the ACFTA is supply chain capability, which you will agree with me that we are lagging behind. But one key priority that needs to be done, and I think from the perspective of Nigeria, perhaps we are taking it in the right direction, is investing in our human capital development to build that capability. And however, the only way you can build and validate that capability is by ensuring that you have transparency and efficiency in a process. And I think one of those technologies that can provide the combination of trust, visibility, transparency within supply chain is blockchain technology. Yes, there are a lot of challenges as to how blockchain can be utilized in an enterprise level, but I still believe that having an open collaboration between different entities across the supply chain, government investing in building capabilities in terms of infrastructure is going to drive a lot of opportunities, and I think Nigeria is going to lead in this particular direction.
Interesting stuff. I agree. The potentials are, really huge right there when it comes to transparency in supply chain and all of that. So what you're saying, to bring it home, is all of those news headlines I have had to see in the last couple of weeks in Nigeria about pipelines running from illegally from the Niger Delta to some parts of Nigeria for up to 9 years, and no one discovered those stuff. Are you saying that blockchain has a role to play in that picture?
Obviously it has a role, because so I think that's really important, and it is even worth mentioning that I have done a massive research around the use of blockchain technology within the oil and gas supply chains. And this issue that has been, lingering for quite a while, I think it is now the right time for us to use the right tools. And perhaps complementing blockchain technology with other technologies like IoT to trace and have visibility around our pipelines is possible. Absolutely is possible. And the reason why blockchain technology is going to be remarkable there is because you don't have to trust on a central point of failure. Because some of these things are driven by human behaviors, whether directly or indirectly. So having a blockchain technology solution complemented with IoTs and other sophisticated technologies using AI definitely is going to help in ensuring that we have a safe and of course secured pipelines within our oil and gas sector. And another one key important thing also for the oil and gas is ensuring that today environmental issues within oil gas flaring is a massive issue, and there is massive opportunity to use those excesses of gas in mining Bitcoin. So this is really an area where Nigeria, we have massive deposit of gas. We can utilize that in order to lead the world in ensuring that we are not just leading in terms of developing blockchain solutions, but we are tapping our resources, like oil and gas resources, into the blockchain space. Thank you.
Amazing, and thank you for that. Amazing. When it comes to blockchain and its application across industries, of course, like earlier speakers identified, there's always this general confusion, whether blockchain is the same thing as cryptocurrencies, whether cryptocurrencies is all about Bitcoin and nothing else and all that stuff. And I took interest in Salisu's response when he mentioned the AfCFTA, that's the African Free Trade Agreement. And it's all about cross-border transactions. It's all about uniting Africa as one market. And I imagine that such markets could become less or become limited if it doesn't have the right payment systems and all of that. And this takes me to Lorien. Yes, I understand that at Centbee, some of the things that you do is to enable payments and all of that. Mm-hmm. And while you were making your earlier presentation, you also identified the key characteristics, of blockchain, traceability, transparency, security, and all of that. In terms of the digital assets innovation that we should be building in Africa to ensure Africa leverages the opportunities created in that sector and across all industries, do you think that digital assets innovation would eventually go beyond financial payments and all this stuff around payments, cross-border transactions? Or do you think that necessarily we must start from there and then spread out?
Yes, so with regard to digital assets or virtual assets as they're called, or NFTs, I'm sure you've seen that there's a lot of hype around collectibles, being able to buy pictures or something, and they call them NFTs. That really is it's a sort of subcultural phenomenon where people have, in the same way that they collect anything. You get people who collect stamps or teapots or something that really has value within a small closed community. That's really what NFTs and digital assets have been up to this stage. And so to me, those aren't really universally valuable. Yes, you'll always have people who are playing in a virtual environment, maybe in a computer game or something, and for them, those assets within that ecosystem are valuable. But really, for this idea of a digital asset to be genuinely valuable, it can't just exist digitally. It has to either link to some kind of real-world asset, like a physical thing, a home, or something of a piece of property, or it has to link to rights. And if you think about digital rights, where do you see that? Well, you see that when it comes to music or movies. If you want to listen to music, you have to subscribe to a service. In the olden days, and I'm talking about olden days, maybe a decade ago, people used to buy music off iTunes or something, and so they had rights to listen to that music. So they had a digital asset. And so that's really where digital assets are going to become useful and valuable if they are used as a digital rights management system. So meaning if you have an NFT, or what's called a non-fungible token, a digital token, it needs to convey some kind of rights to you, where only you, being the holder of that digital asset, have rights to use the actual thing of value, the music or the vehicle. If you own a vehicle, you own rights to that vehicle. And so I think that if you're thinking about the digital assets that we have today, collectibles, they only have value for time and for a specific community. And I think that we definitely are in a bubble. There's been crazy valuations on all these silly things. Maybe not silly within that little community, but generally, broadly, universally, not valuable to anyone else. So I think if we want to see innovation in the space, what we need to do is we need to bring intellectual property law and rights management into this virtual asset space, so that when you own that asset, it means you actually own something, that only you can listen to that song, only you can access that feature on that platform, and that to me is where digital assets need to still get to. And the way we use digital assets today, I think, is just is speculative and temporary, and really just something that's for a subset of the community.
Interesting stuff. You got me started when you talked about intellectual property management and all that. We'll come to that later. I would like to hear from Jennifer.
Sure.
Jennifer is from Startprenuers. I imagine that you would like to say a thing or two about that.
So just to touch on what you said, so first of all, we really need to look at digital assets from different asset classes. So Salisu, you touched on identity. So digital assets have different classes. You have cryptocurrency, you talked about that. You have non-fungible tokens that essentially allows you to own some level. I own decentralized land in the digital space. And then importantly, I wanted to touch on the decentralized identity that you touched on, which is huge with wallets and digital identities, and how you essentially can have these wallets and then be able to have your own tokenized experience and cross-border application for that. Then e-Naira, you brought up e-Naira, there's stable coins. There's so many digital assets that we actually touch on for different utilities. Stable coins, e-Naira is literally a stable coin where you essentially can utilize that for fiat currency and all kinds of cross-border applications. So digital assets is not just sort of cryptocurrency, you have different layers of it. Cryptocurrency applications, you have even enterprise use case of it that works in the telecommunications industry with bilateral settlement and roaming charges and things like that. So it's not just about sort of crypto. There's so many enterprise use cases with it, and I think that's really what I wanted to mention.
Right.
Fantastic, and thanks for pointing that out. It's really about value in this space, isn't it? if you don't have value, and I imagine trying to use NFT to have digital ownership
Yeah.
of nothing. It doesn't worth anything, right? So I guess that's why in the digital asset space, we really need to focus a lot on value. And it tends to make me feel that the next level of digital assets innovation may not do without the traditional players. Why do I say so? The traditional players are, across industries, oil and gas sector, financial sector, mention it. They already have products or services, things that they already offer as value to people. And imagine moving all that value, right, to the tokenized space, to the digitalized space. I just imagine how massive the adoption would be, rather than trying to maybe start with a coin, pump in the market, and all that. So I know, Jennifer, that you have an ecosystem where you ensure startups have access to funding. It's an acceleration system for you. I would like to know, from your perspective of working with startups in Africa, how should the startup founder out there approach digital assets innovation? Is this a conversation for those at the level of providing services to the very high-level banks and governments, talk about in-era products? Are we also looking at the local startups and how they could leverage the digital assets? What do you think?
I think just to touch on the fact that just they announced, I think it was like a few weeks ago, that the startup ecosystem literally through ICO raised the highest amount of revenue, which is $21 billion. Never in the history of the venture capitalist and private equity ecosystem have you seen that level of growth. And that's what digital assets has allowed us to do, and cryptocurrency and blockchain essentially. So I think that the startup ecosystem really needs to look at it as a new way of creating maybe some level of non-governmental income, looking at services and solutions that essentially can provide, solve problems in our day-to-day utilities. We talked about the telecommunications industry. I see a Nigerian startup being able to create some incredible account reconciliation platform for using blockchain technology and these blockchain protocols to essentially solve problems. We talked about the oil and gas sector as well, and these lost and non-traceable oil wells, I guess. So startups really need to look at what problems you're trying to solve. What is the viability and functionality of those use cases? How would those POCs look like, and then begin to actually build real live solutions and then deploy for those solutions. Coming to more what level did you talk about? Like a lower,
Yes.
like the general
The local
public.
markets.
Yeah, the local markets essentially. I mean, local market, again, it's creating access to blockchain technology and educating them on that. Obviously, it's not everyone that can access blockchain for now, but then the more you educate them on the technology and how easy it is to use actually, then it creates a new dimension of wealth creation and value across all borders. So I think startups, first off, look at the problems, build out POCs, look at viabilities, the functionalities, go live and deploy.
Fantastic. I'm glad that startups also have a chance in this space. Sometimes you get the idea that you got to be big before you can play in the blockchain space, which, if you ask me, kind of defeats the essence of blockchain.
Yeah.
Knowing that blockchain is not all about being big, but about value. Now, we've been talking a lot about the innovation aspect of the implications of digital assets innovation. I would like to go to a bit of policy, right? So over the years, we've seen how blockchain has been evolving, and NITDA, being Nigeria's information technology development regulator, has come up with what it's called the National Blockchain Adoption Strategy. That's about 2 years ago in 2020. And the idea was to drive adoption of blockchain mainly in the public sector. I do not have a dossier on how that has been going, but I have a feeling that we've seen more adoption in the private sector than in the public sector. Salisu, what do you think we should be doing about that? Are we supposed to be reviewing the National Blockchain Adoption Strategy to bring in more public sector as well? Or should we be doing something different regarding how our public agencies like the NNPCs and the rest of them can also adopt blockchain?
But I think one key important thing is to focus on having a particular specific use case.
Yeah.
And how that can be able to work is by having obviously a collaboration between different entities and prioritizing our problems and how this particular solution can work. So let me give you an example. There is what is called the blockchain, the emerging technology hype cycle by Gartner. In 2019, I think early 2020, blockchain technology was removed from the list of emerging technologies. Do you know why? Because it is no longer considered as an emerging technology. There is massive advancement in blockchain technology application. So what Gartner decided to do is to come up with a hype cycle for blockchain technology, different areas of application, and what government and different sectors around the world are perhaps doing. So in line with the National Blockchain Adoption Strategy, I think today one of the most fundamental things for us in Nigeria is digital identity. I expect to see the DG and of course the NITDA working on something relating to how blockchain technology can perhaps validate and of course ensure the integrity of our national identity, which of course the national identity is also part of the digital economy family. But I think absolutely that's fundamental everything that we can build in this country. Thank you.
Fantastic. And I like that you mentioned the national identity system in Nigeria, because I am aware that some components of that system integrates blockchain. I guess this is something some of us may want to look at after now. And it's pretty interesting seeing that at least a few government agencies have started exploring the potential of blockchain in what they do. I think this should be encouraged. Hopefully, maybe not in 2023, but sometime later on, we should be seeing Nigeria perhaps adopt blockchain for conducting general elections, so as to have transparency in the system, right? Yeah. So now let's go to Saminu, right? You talked about tokenization, and this is one aspect that a lot of people, I think, still don't understand completely. People talk about the possibilities in the digital asset space. They want to move in there. And the answer they always got is, you need to have a token. And because of that, philosophy or point of view, what we have seen is a rush towards token creations go down to coin markets, and then we create a whole lot of markets for speculation and all that Lorien was also talking about earlier. What are we doing wrongly? How should tokenization, be creating value in the space? And can you tell us a bit about the risk and the opportunities in there, please? It could be from a real estate sector perspective. I know there are those in the house who already apply tokenization in real estate in the country. Any sector you could look at, tokenization, what are we doing rightly? What are the risks involved?
Thank you very much for that excellent question. I think with regards to tokenization and I'll start with the risk associated with tokenization. We have to think about the end user. If someone gets scammed or once on a blockchain, they'll probably put it to a chance. They get scammed twice, they'll probably not come back to that infrastructure anymore. So we need to empower the cybersecurity companies and also blockchain forensics companies and also the law enforcement in ways that we can put in either infrastructure, let's say escrow services that are built into blockchain by default. If something gets a level of a break the glass moment, those actions can be reversed just to maintain the integrity of whatever you've built. And this is why we have some closed blockchain networks, because no matter how wonderful the technology is, there is always bad actors out there. And they'll always try to game the system. And this is why, in the long-term future, because if we're not protecting the end user, they will not adopt this blockchain. They will rather go back to the Web 2 era, where if anything happens to me, I can call the customer service, I can tell them this is what happened, I'll call the bank and I'll tell them this is what happened. So that's on the financial side. On the security side, we've seen some good use cases for blockchain. Blockchain forensics, there was an article that came out, I think 3 weeks ago, on Wired, where they highlighted how blockchain was used to fight for counterterrorism use cases. Because due to the novel nature of the technology, people still do not know how transparent it is. So there's this perception that criminals are still using blockchain to launder money for ransomware payment, for terrorism, ill gains from terrorism acts. But you can actually still counter them using those technology. You can send funds to pay for ransomware. You can track and trace those funds, and you can catch those people. So there are multiple sides to one is the security side. There is that end user protection, and there's also the use cases to actually solve much larger problems on national level. You talked about I think your other question was on how people are minting multiple coins, and this is on the speculative side. I feel like blockchain and cryptocurrencies are two different things. Well, one is built on the other. They are not exclusively different, but they're mutually independent. Still not correct, but yeah, they're connected. Cryptocurrency is a new technology. People get excited about new technology, and people exploit those technology. We are evolving over time. You've seen there needs to be a lot more education on identifying the bad actors, the people that are trying to actually bring terrible actions into this innovative tech, because of the decentralized nature, it's permissionless, anyone can do anything on there. This is why there needs to be a bit more focus on on-chain identity. It goes back to the identity talk. We need to be able to verify whoever is actually creating a wallet. We need to be able to know what they're doing online. We need to be able to know who they're interacting with, and then we can either reward or punish them based on their on-chain activity. And this is where all on-chain pattern recognition comes in play. You can also, and there's been a lot of innovation in that area as well, where loans are being given out based on how credible you are on-chain. If you've been involved in minting a shitcoin, you dump it on the community, they know who you are. You can see wallet addresses and Twitter accounts have been connected these days. Mobile numbers with Truecaller can be, the Truecaller on the Nigerian mobile phones can be connected to Inera wallet. We can see what you're doing, and we can then perceive the type of actions or actually predict some of the future action that can be taken, not just by the security agencies, by the way, but also actually rewarding good use cases, like giving out, reducing interest rates on loans for people that are maintaining specific balance, using it to automatically pay back VAT and tax rebates. There are loads of use cases for this, but security and identity, security specifically, is a key factor because we need to make sure that we can give as much trust to the end users as possible, because without the end users, then you just have a ghost chain. Nobody wants to use it.
All right, thank you very much. I'll quickly go to Lorien on this. For some time, we've had various conflicts here and there, sometimes informed by misconceptions and misunderstanding around blockchain technology, what are virtual assets, what are currencies. As a matter of fact, when the Central Bank of Nigeria in February 2021, over a year ago, issued that directive, against the use of crypto in Nigeria's banking and financial system. It did not say you can transact with those that are into digital assets, but stay clear from those involved in digital currencies. It treated everything as digital currencies. Some of our clients, for instance, were involved in NFTs in the entertainment and sports industry. Because of that ban, they could not also transact with the banks. I see that you have fine background in advising, the World Bank, IMF, and all these traditional institutions about emerging economies and how blockchain and digital technologies play. What would you say should have been the approach in terms of minimizing the risk and maximizing the opportunities for digital assets in Nigeria from a central banking, perspective?
Thank you for the question. It's a very good question, because really the word misconception has been the defining word around all this since the beginning. Early on, when Bitcoin was invented, a whole community of people who thought that this technology was specifically created to undermine central banks, undermine government, they became prominent on social media and started spreading this false narrative that Bitcoin, and I'm talking about Bitcoin because that was where it all started, was meant to be something that was anonymous, something that was decentralized in the way that governments couldn't control. And these are the narratives, and I alluded to this in my talk, that really have prevailed. And this is why we've had 10 years of stagnation. Now, we've been talking about all this progress we've made in blockchain. We actually haven't made any progress at all. We are no further now than we were 10 years ago. And the reason for that is because of all these misconceptions that crept in, that this is a decentralized, unstoppable, uncensorable, unconfiscatable technology. And that is a complete false notion and is not true. Now, of course, that hasn't stopped people trying to create such a thing. And that's why we have crypto. Crypto is not Bitcoin. Crypto is this manifestation of people out there who want to create ecosystems, who want to create platforms that they feel will be outside of the purview of government control. And they will fail. And unfortunately, they've been their worst enemy, because they publicly admit that this is what they want. And that's why BSV, the BSV blockchain, why it exists. Because the Bitcoin itself was changed by these communities who don't like the transparent nature of Bitcoin. And they don't like the fact that the whole thing that secures Bitcoin is not technology. It's not these giant servers out there that are consuming all this power and that cannot be stopped. The thing that secures Bitcoin was honesty. In fact, if you read the Bitcoin white paper, it keeps referring to this word honesty. Well, what does that mean? Does it mean that technology keeps and forces you to be honest? No. Honest means doing the right thing. Why? Because if you do the wrong thing, you get punished. And one of the fundamental concepts around Bitcoin was what we call proof of work. In other words, these miners out there are consuming energy to be able to secure the network. But is it the technology and the energy that's securing the network? No. It's the fact that these miners are now, through that proof of work, forced to become large enough so that they can't hide from the government and they can't hide from law enforcement. And if they do something like what's called a double spend, in other words, they spend a transaction and then they spend the same coins again, you can see them. It's on a transparent network. You see it and you know who did it. And so what's going to happen? The police are going to arrive at the miner and they're going to seize all the equipment. They're going to shut the guys down and they're going to lose their investment. So honesty is about doing the right thing because it's in your best interest. And so all these false notions have crept in, and this is what has kept this whole space stagnant for 10 years, 12 years now. Because governments and businesses, commercial entities, they don't want to get involved in this. They don't want to be touching these cryptocurrencies because, what happens now if they accept a cryptocurrency and the government turns around and says, okay, we've decided that that's illegal. Of course they don't want to go there. So all these false narratives, all this false information crept in because of these loudmouthed pundits on social media who are very popular because why? They're promising that you're going to get rich. And that's how you get followers. That's how you get a crowd, is you say, buy this and it'll make you rich. Of course you're going to get followers. And that creates social influence. That's what's called social capital, when you got 1 million followers. And the exchanges play into that because the exchanges, they want to make money. And if people are trading all these things all over the place, they don't care if the price goes up and down, they make money anyway. And so now we have this entire industry based on speculation and false information. But if we just go back to the original idea that this is going to be a regulatory compliant network that facilitates low-cost transactions and has traceability and provenance. What does provenance mean? You can see where coins were and where they went to next. And another very important thing about the pseudonymity of Bitcoin, which means that you can see every transaction, but you don't necessarily know what those accounts belong to. The whole thing about driving this industry forward is demonstrating to government that if you are an accountable institution, that's a technical phrase, which means that you are compliant with the local rules and regulations, and that you link your identities of your customers to those transactions and can report that information to the regulators, then of course they're going to be happy for you to create solutions that actually help people. Government wants to make sure that there are solutions out there helping people. And if they can bring down the costs of transactions, if they can have efficiencies introduced into the businesses, like we talked about supply chains, then of course government is going to be embracing it. And not only that, they are also going to require that businesses use it. Because now they know that there's no hiding. You can't hide transactions, you can't hide money. It's a ledger, remember, a distributed ledger. That means you can't hide the books, in Ponzi schemes and companies that commit fraud. They always have different books. They've got an accounting ledger that they submit to the auditors and the tax authorities, and then they've got their secret books. But by having a single ledger, and this is why a one blockchain world is inevitable, because you can't hide. You can't hide your transactions, you can't hide your money. And more than that, because now we have these large, very few mining operations out there, it's very easy for government to say, see all that $1 million that was just transacted, that went to a terrorist. Please stop that money. And of course the miners are going to say, sure, we'll freeze those funds. We'll redirect those funds. They can do that. Why? Because they don't want to lose their investment. They don't want to waste all that money that they've put into that infrastructure and get it wasted. So you can see that the narratives around crypto, which is a terrible thing, has completely meant that we've stayed stuck 10 years ago. And we could have been so much further if we had ignored all these crazies and carried on with the original idea of what Bitcoin should be. A transparent, regulatory compliant payment network that can be controlled and measured by whatever rules and regulations are in place. And of course, payment regulations are well established. This is a very important concept for people to understand. That this is not about all these different blockchains, all these different tokens, I'm going to invest in this one, I'm going to do that. This is about creating the missing piece of this internet puzzle, where we had data networks with the internet, but that very important missing link that's been missing from the internet since its conception up until 2010 when Bitcoin was output in the world, that we now have a way to audit that information and we keep using the word trust, to be able to now trust the information on the internet. Because we have an ability to use this blockchain that is this immutable ledger that can be audited, can be controlled, law enforcement can act upon it, money launderers will get nailed, terrorists will get nailed, all those things can happen. But crypto took that away from us. So we need to go back. We need to go back to the original. In fact, my good friend and colleague Jimmy Wynn is going to probably talk about this, going back to the original idea of what this was meant to be. And I can assure you, if we stop talking about crypto and we go back to what Bitcoin was meant to be, then we are going to see rapid acceleration. Then we are going to see evolution, and we're going to see development. And we're going to see innovation, and we're going to see all these things that we hope to come.
Fantastic.
But until that day happens, you know, we're just going to have to ignore those crazies and stick to what is good and honest.
Fantastic stuff. That was beautiful, very insightful. In a few minutes, you just broke down, some of the misconceptions about blockchain and how, as a matter of fact, the government should be the first to jump in on the blockchain because of the transparency it provides.
If government understood what I just said, they would be pushing.
Yes.
This. They would be pushing businesses. Say, you want to have transactions on your system? You have to use blockchain. So it's not about us convincing government. When government learns this, they're going to be convincing private industries.
I agree with you. That's the feeling I get as well. We hope that changes. We see more of government pushing this than private sector. And that brings me to Jennifer, and this is the last question for the day. A lot has happened in Nigeria, especially in the last 1 year. The Financial Action Task Force, the global body that monitors terrorism financing and money laundering, was pretty concerned about the continued growth of digital assets across the world. And it's made some recommendations, including to Nigeria, that we need to step up our AML, anti-money laundering, and terrorism financing compliance processes in order to ensure that all that opacity that the Central Bank of Nigeria and governor talks about, leaves, and we have more transparency. The Securities and Exchange Commission in May of this year, for the first time, recognized digital assets in Nigeria and now regulates that space. There are now licenses for players in the space as far as the capital market is concerned. My question is this. Sure. As one in a startup ecosystem, some of the feedback we've gotten from the SEC rules, the new one for digital assets, is that it will not help local innovators build. there isn't been the licensing fees and all that. It's on the average about, sometimes you need to have a capital base of up to $1 million to play in that space. I think that you would be concerned because you run an incubator and an accelerator system where you groom startups. Do you think that we may need to look at that again? Or for the purpose of consumer protection and investor safety, which regulators talk about, do you think we need to necessarily restrict that market to big players?
I think you look at blockchain technology, and essentially the reason why it started in the first place is inclusivity, right? So looking as far back as Web 1, Web 2, where essentially the web was quite static, right? It was very static. And then Web 2 came about and it became more dynamic web. And then all of that evolved into Web 3, obviously Bitcoin and different cryptocurrencies being in those web regions. But when you look at how data is being transferred from one company to another and data assets and all of that, it's very centralized. When you see the level of centralization, you start to think about the power and control and what's going on there. Again, this problem you're talking about is power and control. The purpose of blockchain technology is to decentralize that power, is to take that away from the big players and the top players. Another problem, even with what you mentioned, even the proof of stake. If you look at Ethereum or Hyperledger fabrics and their consensus mechanism, they have the same problems where you essentially have the proof of stake or Byzantine fault methods having higher having higher Ethereum to trade with, right? It's a nightmare. Or if they've been in the ecosystem for longer, then they're earning more. So it's essentially making the richer and then neglecting sort of the startups and all of that. So coming back to it, I think that we definitely on a regulatory sort of framework even need to look at consensus algorithms. Like how are these miners making money? How is blockchain going to be inclusive of the startup ecosystem? Of course, some startups have benefited from it. Like I mentioned earlier, there's been a $26 billion raise, ICO raise. Never in the history of venture capitalists or private equity have you seen that. So my thought is, on a regulatory perspective, we really need to look at inclusivity and what that looks like for the startup ecosystem in Nigeria. The startup bill just got passed, but are we looking at emerging technology? I don't want to say emerging technology because someone said don't say the blockchain is an emerging technology, but it is though. That blockchain, that startup bill that got passed was emerging technology, that blockchain technology looked into for that, things like that. So that's definitely what I would say to that effect.
Fantastic. We need inclusiveness in the space. Fantastic stuff. Ladies and gentlemen, this has been prioritizing blockchain, the digital assets innovation, and its implications. Thank you very much, guys. I think a round of applause to all of our panelists and for those who had to fly into the country to make these contributions. Thank you very much.
Thank you very much, guys. Will you want to stand up for your photograph? Thank you. I would like to also call on DJ Nidda to join on stage to take this with our panelists.